What's up you guys, Sasha here. Now Trading 212 has over the last few days been in the news and not for the best reasons. They've had a few weeks where they've had several negative press issues, they've had customers having complaints and having issues about the service, and I just wanted to talk about whether your money is actually safe invested in a new and relatively unknown app like Trading 212, what the issues have been, what the different complaints have been, and just my personal take on whether these are important and what I personally think about them. Now, just before we get into anything to do with this video, I wanted to make it really clear. I am not a financial advisor. I can't advise you because I don't know your circumstances. If you need financial advice, please go and find a suitably qualified professional. Now, let's dive right in. The biggest issue that has been happening at Trading 212 over the last few weeks is the fact that their trading has been delayed, and this delay has become quite noticeable. Previously, when you use Trading 212, if you wanted to buy shares, if you wanted to sell shares, the trades would happen extremely fast. They would happen within fractions of a second, maybe 1 or 2 seconds. You want to go and buy shares, you press a few buttons, bang, they're there. You want to go and sell shares, exactly the same thing happens. Recently, this hasn't been happening in that way. With me, I've noticed that the trades are much slower. I've literally just now, before filming this video, went and sold 3 shares just to go and try it out. And it took me quite a long time. I think it took me about 1 to 2 minutes. I'm going to put the video up here as to exactly how long it takes so you can go and watch it while I'm telling you about this issue. Some traders on their community have been saying that this has been happening quite a lot to them. And reportedly with some of the large transactions, this has been happening for hours, let alone minutes. That's really not very good. It's really bad news for day traders. It's really bad news for those who are trying to time the market, who are trying to very quickly get in and out of positions, and especially those trading on the CFD platform, which when they suffer the issues that I'm reporting where it might take, say, a minute or two for you to get out of a position, this can cost people a lot of money. For casual traders like myself, it is not that much of an issue because for me, it just is an issue with me transferring my funds from one investment to another, and it's slightly frustrating. It involves me having to wait or maybe come back to the app at some point in the future after doing a sell to then go and buy something else. But materially, it isn't really that much of a thing. Another reason why Trading 212 has been in the news recently is because you can go and get yourself a free share if you hit the link in the description below. If you're from one of the qualifying countries, which is UK plus a few big European countries, and you go and choose to go and open one of these accounts and put the minimum deposit into it, you will get yourself a free share, and so will I. I really appreciate your support if you're interested in doing it. If you're interested specifically in how the whole process works, how to go and set up the account for the first time, I'm going to go and put a link in the description below to the specific video and put it up here as well. Go and watch that after this one. Now, another piece of news that's come out very recently, just a few days ago on Saturday 28th of November, Trading 212 have updated all of their users that they are changing the terms and conditions of the CFD accounts. Now, these changes are coming in on Tuesday the 1st of December, which means traders are really only being given 1 trading day's worth of time in order to sort their affairs and in order to sort their positions before these positions will automatically close out if they don't meet these new terms. These new terms only really apply to CFD accounts and they affect leverage. They now say that the minimum requirements for CFDs are to have 50% max leverage, which is a ratio of 1 to 2. Now, really briefly, what this means is if you're trading CFDs and you're leveraging your positions by using essentially borrowed money from somebody else, the ratio at which you can do that has reduced. So if, say, previously you were able to, for example, go and deposit 20% or 25% and make up the rest of the amount that you're trading with this borrowed money, that ratio has now reduced and it is now just 1 to 2. Now, the reason they've given for this change is unprecedented trading conditions. There's been a lot of volatility in the markets. It's been very difficult to actually go and execute the volume of trades because investments have become a lot more popular over the recent months. But I think the really big issue here is the fact that due to all of the technical issues that are ongoing, this is just my personal opinion, they are struggling to go and hedge their position. So every time a trader goes and does one of these trades, Trading 212 have to go and hedge it, essentially betting the opposite way so that they don't carry any risk if something were to happen in the market very sharply and that trade wasn't able to be closed in time. Potentially due to the same delay issues that I'm going to cover in a bit more detail a little bit later in this video, Trading 212 have decided that they don't want to provide as much leverage to these traders, and I actually think this is a great thing. There are much better platforms out there for people who want to be day traders. There are special dedicated systems and platforms, and yes, they are not free, and yes, they require a bit more investment from people who want to be doing this. But the ultimate reason that this is happening, in my opinion, is that Trading 212 was never designed to be a platform for day traders, for active traders doing hundreds of thousands of trades every single day to try to catch those small rises and fluctuations in price and make their money on that. But anyway, I'm going to get to some of the details about that in just a moment. The third thing that they've been in the news for very, very briefly, and most people probably haven't even noticed, is the fact that they have withdrawn their application to actually set up an office and operate in Germany. Now, some people gave this a lot of weight. Some people noticed that this happened and said, is this some kind of negative sign? Is this a massive issue with the way that the company is operating? Are there reasons why they didn't get their license? And there is very little information out there as to exactly what happened, but here is what I do know. In the last few days, Trading 212 have informed the Bulgaria's Financial Supervision Commission that they have decided to stop trying to go and open their office in Germany. During the process of filing their application, it has been reported allegedly that several pieces of information in the form of documents have been requested from Trading 212 that previously have been requested for their operation in Bulgaria or their headquarters in London. And on the back of those requests, Trading 212 did not actually provide those documents. Now, it's not clear from the news as to exactly what these documents are, why exactly Trading 212 decided not to provide them. Is there anything specific in them that they didn't want to disclose, which is either something shady or some kind of trade secret or something else? In my opinion, it doesn't really matter too much. Trading 212 are actually at the moment operating in Germany anyway. They are the leading or one of the leading trading platforms in Germany as it stands, as they are in many other countries as well. So it's not like they have decided against going and opening into a new market. This, in my opinion, is more of an operational issue. It could be that they've determined that they don't actually need an office in Germany because they already have the two offices that they currently mainly operate out of. It could be that they decided that they didn't want to go and provide this information because there's specific trade secrets and important stuff that would have come out that they didn't want to make public. I don't really actually care. In terms of the way that the company operates, I don't think this is going to have any noticeable material or any real impact whatsoever, and speculating on the reasons why they have been doing something behind the scenes doesn't really add any credence to any kind of argument as to whether that was for a good or a bad reason. Anyway, let's talk about these delays in a little bit more detail, because this is what the community members and a lot of people who use Trading 212 for their daily trading have been complaining a lot about. Lots of people have been complaining, saying that Trading 212 is falling below standards that are acceptable and complaining that they're going to go and raise this issue with the FCA. But the issue is that it looks like nothing to do with these delays is actually down to Trading 212 themselves. Now, Trading 212 use a company called Interactive Brokers, who are one of the largest, if not the largest, depending on how you determine, international electronic brokerages used by third parties like Trading 212 in order to actually facilitate the process of buying and selling shares in real time. Apparently, the issue with delays and the issue with fulfilling requests has been at the Interactive Brokers end, and the reason that this is very likely on top of what Trading 212 have publicly declared over the last few days is that the same issues hit a lot of the other really big trading platforms around the world, including Schwab, including TD Ameritrade, and including Hargreaves Lansdown. So we're talking about some of the giants having exactly the same issues as Trading 212, but nobody really goes and has the same issue with them because those platforms are definitely not designed for high frequency trading due to the fees involved. And as a result, very few people actually felt any impact on those platforms. And that's why Trading 212 is probably getting a slightly disproportionate amount of complaining and people finding issue with it. It could be because of some technical issue with their API setup. It could be because of the sheer number of users that Trading 212 and other platforms are now sending in the way of Interactive Brokers, because trading has become so much more popular due to its increased accessibility in recent months. It could also be because they forgot to go and smash the like button for the YouTube algorithm. So if you haven't done so already, please go and hit that like button. It would really, really help me. Thank you so much. I really, really appreciate it. Anyway, here is my take. First of all, Trading 212 is based and headquartered in London. Now, it is true that they still have a big operation in Bulgaria, and a lot, I think, of the coding, a lot of the development, a lot of the background processes still take their place in Bulgaria because that's where the company was founded back in 2004. As the company is based in London, they are authorized and regulated by the Financial Conduct Authority, and your money is also protected by the Financial Compensation Scheme. So that means any investments that you have with Trading 212 up to a total value of £85,000 are guaranteed by the government in case that Trading 212 was to go bankrupt or something else unpredictable happened tomorrow. So in the worst possible case scenario for most regular investors and regular traders who don't have over 85,000, your money is protected by the scheme, and this scheme is actually incredibly great at paying out very quickly and in full. But here are a few other thoughts that I have in my head. Now, first of all, Trading 212 is not a brand new fintech like many other fintechs that people really like using. Unlike some of the challenger banks, they've been around for some time, and not only that, but they are actually profitable. They are not sitting there spending millions and millions of pounds living from one funding round to another. This company actually exists to make money. They are making money as they are today, and they are making actual profits. And to me, that shows a lot more stability than companies like Starling, companies like Monzo, that a lot of people seem to have far more faith in than this trading app. For those who are serious day traders, the likelihood is that Trading 212 is not the best platform for doing trading. The fact that the platform does not guarantee immediate buying and selling of stocks, the fact that you have these delays that you can't control, the fact that you don't have access to 100% of all the new shares as and when they arrive, this platform is simply not designed for day trading. When traders go and log in, when New York Stock Exchange or NASDAQ opens and try to go and buy shares, and at that very precise moment, the buying and selling of stocks is delayed because a lot of other people are doing exactly the same thing, and those volumes are potentially affecting the speed at which interactive brokers are able to actually fulfill those requests. Because of all of these issues, if you are a serious day trader, you really need to go and actually use a serious day trading tool, something that you're going to have to pay money for, something you're going to have to go and build a big computer for and go and install it and go and use it that way. For long-term investors like me, I personally think that none of these issues that have recently been happening are really material at all. The fact that it takes me a few seconds or in perhaps a minute or maybe even 2 minutes to go and sell a stock, and usually it's quite a lot quicker to go and buy a stock, doesn't really affect my decision on whether or not I want to buy it. I don't go and sit there trying to time to the nearest second when I want to go and buy a stock that I'm planning to hold for several years. I go and make a decision based on a combination of different factors, the products that the company does, the way that they've been performing, the way they're going, the direction, etc. And I'm investing for the long term. I don't really even care that much as to exactly what the price when I buy the stock was, because I'm looking for 10, 20, 40, 50, 100, 200% returns on this stock. I'm not interested in trying to eke out a 0.1% gain and then cash that in. The CFD issue with a very short notice, which is within Trading 212's terms and conditions, may really annoy a lot of people off. I completely get it. If you use CFDs and you got this notice and you have one day to go and make changes to the way that you do your business, you probably will be quite frustrated. But at the end of the day, it is their platform, it is their prerogative. They are there to make money and not lose money just because people are overusing the leveraging functionality in times when they're struggling to go and hedge those positions. So I personally am very happy to continue using the platform. It does everything that I needed to do. It does it completely for free. The company is stable, my money is protected, so I'm perfectly happy continuing to use it. If you have a different opinion, make sure you go and leave a comment below. I'd really like to hear what you have to say. If you're interested in an update on what's happening with Trading 212, on what might be happening with other trading platforms, I have some interesting videos coming out about their competitors and some comparison analyses. Go and subscribe to this channel and hit that bell so you get notifications every single time one of my videos comes out. Thank you so much for watching. I really appreciate it, and I'll see you guys later.